Hope everyone's doing well and had a good day. This is the Emini review for Monday, June 10th, 2024. Because it's Monday, go ahead and start the weekly chart. You can see the market was in a tight bull channel. Then we had this trendline break, test of the moving average, found buyers, and we're retesting the high of the trend. But what usually happens after a trendline break like this is the market converts into a trading range. So we've been big up, big down, big up, might be in a trading range here. And over the past 4 or 5 weeks, we've had overlapping bars, small bodies and big tails. So probably in a trading range. So sellers above and buyers below. The bulls are hoping this became a less steep bull channel. So tight bull channel, trendline break, but then they can redraw it like this. And they hope we just continue channeling up in there. And that this is simply a pullback and a minor reversal at resistance. The bears, they're hoping the market's contracting. The range is getting smaller, and eventually the bulls get exhausted and squeezed out, and then we correct further down. We're in a trading range, possibly high in the range. We have gaps that are open and gaps closed in trading ranges. So the bears want this week to disappoint the bulls, maybe trade above the prior week's high and then turn down and become a reversal week, become a reversal bar on the weekly chart and a second sell signal. So here's the first sell signal, but after a strong rally and a weak signal bar, the odds were there were buyers below. But if there's a second reversal, more bulls will exit and more bears will short. And then for the daily chart, same idea. We have overlapping bars, might be a leg in a trading range, and then clearly in a trading range, big up, big down, retesting the highs. The market in an expanding triangle on the daily chart. And the bears are hoping we're high in the range, we're getting an expanding triangle, breakout mode, and we're high in the expanding triangle, and that we find resistance at this line. And the bulls are hoping it's an expanding triangle bull flag. We test it here, maybe 1, 2, 3, 4. The bears are hoping 5, and then we reverse down. The bulls are hoping this is trend continuation, and maybe we go for some sort of measured move up, maybe of this trading range here. But the odds are we're going more sideways. And we are high in the range. It's been, let me pull this up one more time. Some traders look at this as 1, 2, pause, maybe 3 legs up and high in the range. So that increases the chances of sellers above. And for the 5-minute chart today, gap down from Friday. And let me just draw yesterday's low. And I'll draw the high as well. So we gap down on bar 1. Bar 1 was a bear bar, but closing above its midpoint. So it's a buy reversal bar. And some traders see it as 2 or 3 legs down. Maybe one big leg down here, pull back, leg 2. Maybe it's 1, 2. 1, pull back 2. Maybe it's 1, 2, 3. Maybe it's 1, pull back 2, 3. And the point I'm getting at with all of that is we have possible completed price structures. This might be a wedge bottom, especially on the higher time frames when you look at the overall big picture. 1, 2, 3 big legs down. So the bears might be exhausted. Plus, it's still a higher low above yesterday's low. And yesterday's low, when I say yesterday, if it's Monday, I'm referring to Friday. So yesterday's low, the prior trading day, is support. We had a strong rally, and it got a second leg, but obviously we're in a trading range. Big legs up, big legs down, we're low in the range, so better to look to buy. But for now, tight bear channel, but it is becoming parabolic. If you look at the slope from this tight bear channel into the close of the prior day, then we gap down, and that's acceleration. But it could simply be a sell vacuum test of support. So bar 1, not a good bar to buy above. It's a weak signal bar for the bulls. The bulls want more buying pressure and a better signal bar. The bears can sell above bar 1, and it's probably always in short because of price action. But because of context and what I mentioned with all these legs down, it actually might be always in long because of context, and better to be long. Bar 2, an inside bar. With inside bars, generally, there are sellers above and buyers below, but in this context, I think it's good. I think it's okay to buy below, but as far as selling above, I would not. The reason I would not is because it could be a climactic third leg down, low in a trading range, and there's a real chance we could vacuum up to resistance or somewhere in the middle of the range. And so far, we have a bear bar with a big tail below and an inside bar, so this is not all that bearish, and we're far below the 5-minute EMA. Then bar 3 broke out to the downside and then immediately pulled back and reversed up. So it's still not a good buy signal bar, it's a doji, but it is a micro double bottom and a lower low, bar 1 and then bar 3. Probably sellers above. It's a micro channel since the prior day, 78. But again, look where we are. We're testing yesterday's low. And then bar 4, we finally tested yesterday's low, but we traded below bar 3 and found buyers. What's interesting here, the way the markets are fractal and the patterns repeat. If you look at a smaller time frame chart, you would see that bars 1, 3, and 4 create a wedge. You can see we went down on 1, pulled back, down on 3, pulled back, down on 4. Now I know that bar 4 is not a very enticing buy signal bar. It's got a bare body, but the reality is it's 3 small legs down here. It's a parabolic third leg in an overall trading range. We're low in the range, and bar 4 is a buy reversal bar, closed above its midpoint. So that's the minimum requirement. Some bulls will probably wait to buy once there's more evidence that we're going higher, more buying pressure. But as far as being short here, I would not. So as far as selling above, even though it's a micro channel, I think the context is bad. And it's more likely we're low in a trading range. Until the bears get a strong breakout below the prior day's low, I would not be looking to short. Bar 5, a bull reversal bar triggering the buy above bar 4. So now the bull stops have been triggered and those entry orders have been filled. Bar 5 is a weak low 1. It's low in a trading range and it's a bull bar. The odds are there are buyers below bar 5. And then 6, continuing to the upside. We did not trade below bar 5. Traders probably would have bought below bar 5 if we went there, but we didn't. So any trader who had a limit order to buy below bar 5, they weren't getting filled. They eventually got a sense of urgency and started to buy. They started to pull their limit orders higher and began to buy the market. Bar 6, we went down on the first 4 bars. Now we're reversing up. Might be a trading range, down and up. So there might be sellers above bar 1. But again, the overall context, the entire pattern on the chart is a trading range. It's clear we're low in the trading range. The bull breakout on bar 5 and 6 is big enough, it'll probably get a second leg. And then it's continuing on bar 7, so 3 consecutive bull bars. It's a micro channel since bar 4, 4-bar micro channel, probably buyers below. Traders can argue it's completely below the moving average. It might be better to wait until there's been a clear breakout across the moving average. And that would be higher probability. But if you do wait for that, there's a trade-off. You have less reward in the trade. You'll be buying higher, but your probability will be higher. So then, of course, if you bought lower, if you bought here, your probability is lower, but your profit potential is bigger. And then a vacuum to testing close to the moving averages. on bar 8. Whenever you have 4 or more consecutive bars, and then you have an acceleration like we do here on bar 8, that'll often lead to profit taking, and climaxes in general will lead to 1 to 3 bars of sideways. And because we're testing the bar 81 low, the moving averages is accelerating after 4 or 5 consecutive bars, there's an increased chance we go sideways. Bulls who bought lower will take this as a gift and take profits, but this is still just one leg, and the odds are it'll get a second leg, even if it pulls back, and most breakouts do pull back, so bulls will be looking to enter on the pullback, and bears who are trapped, maybe a bear sold above bar 4, they're looking for any pullback to reduce their loss. A bear might have sold 4, scaling and higher. If they're aggressive, maybe on the close of 8, looking to exit at their midpoint. And you can see what happened on 9. Bulls, the risk became too big for the bulls. Bull breakout, bar 5 to bar 8. Here's the 1-to-1 measured move, but it's not clearly 60% yet. We're just below resistance, and we're getting acceleration after consecutive bars. The odds were we would pull back. And the bulls and bears know that. The bulls are taking profits, and the bears are selling to make their average price higher. And then you can see what happened if a bear sold above bar 4, scaled in maybe on the close of bar 8. Here's their midpoint. And bar 9 quickly vacuumed to that price, and it looks like it closed there. But bar 9 is really just a pullback. And the odds are we'll get a second leg for the bulls, even if it's a smaller second leg, and even if it's only a couple bars. We'll probably test the high close of bar 8. If you also think about a higher time frame chart, you could think about the hourly chart, or you could think about where we are up to bar 8 or 9. The market tested down and then reversed up. At this point, this is a bull reversal bar closing on its high. And then we did not trade above the high, but that's a bull reversal bar, signal bar, and a big wedge bottom at the bottom of a trading range. We're pulling back on bar 9, and we traded below bar 8. The odds are there were buyers below. But bar 9 might have been strong enough that it will get its own second leg. So the bulls might need 2 reversal attempts to continue. Small bar, bar 10, it's an inside bar, so lowers the probability. As far as selling above, it's really aggressive because I still think we're always in long. And at the very least, I think it's buy low, sell high, because it's an overall trading range, and we're low in the trading range. You can argue we're high in a smaller trading range, but that's minor. And you can argue that bar 9 was strong enough for a second leg, so sellers above for a scalp. That's also true. You might have bulls disappointed, buying the close of bar 8. 9's their entry bar. They're looking to exit at their entry price. But in this case, I'd rather look to buy below bar 10. But with inside bars, the breakout probability is reduced, and breakouts fail more often. Bull breakout 11, but still inside bar 9, and we've been sideways for 4 bars. And bulls who bought the close of 8 are disappointed with their entry bar. You can see they were selling into the close of bar 11, testing the close of bar 8, and we're still below the moving averages. And the bears are hoping we get a double top with bar 8 and bar 11. 11's not a strong sell signal bar. The bears are just hoping we get a signal bar on the next bar or a big entry bar, surprising everybody. And instead we got bar 12. So remember what I said up to this point. We have a bull reversal bar. We went down, we went up, and at this point it's a strong bar. And now bar 12, look where we're closing. Similar price, it's a bull reversal bar closing on its high on the hourly chart. If we look at this chart, I think it might be worth pulling up. Switch this 15-minute chart to the 60-minute chart. It'll be more clear. And okay, took me a second to see it. So here's the first bar of the day, up to bar 12 on the 60-minute chart. Isn't it possible that we have a rally and then a trading range, but it's less than 20 bars, maybe it's about 20 bars, but it's possible. If anything, it's a bull trend or a trading range. And in either case, it looks like we're going higher. We've had 3 legs down and a good, strong buy signal bar on the 60-minute chart. So that's where we're at on bar 12 on the 5-minute chart. So I thought that was interesting. So here, the bulls, we have open gaps. Bears who sold above bar 4, they got trapped. This breakout point above bar 1, there's a body gap. So if you look at the open of the day and draw a line, bar 9 did not close that gap. It came close. There's actually a space. Even if bar 9 closed at the open of bar 1, that gap would still be open. It would not be considered closed. So we have an open gap. There was a tick gap from the close of bar 9 to the open of bar 10. So we didn't overlap, but the open of bar 1 is the same price as the open of bar 10. But there's still an open gap. And that's a sign of strength for the bulls. At this point, it's probably a trading range or a bull trend. And if it is a bull trend, bulls will buy at the high. So we had this reversal attempt, but quickly reversed up. Now we have 3 consecutive bull bars. The bears are going to have to do more if this is a double top. And this momentum is strong enough up. It might be leg 1, pullback, leg 2, but the bears only have 1 bar in about 10 bars. It's also possible on maybe a 10-minute chart or some higher time frame chart, this is all 1 leg. And so we might get another pullback, but this could all be leg 1, pullback, and then a bigger leg 2. But again, if this is a bull trend, traders will buy at the high, betting on breakouts succeeding. And then we got a reversal bar on bar 13. The bears, it's a higher high, double top. You can also argue it's a wedge. 1, 8, and 13. And it's a good sell signal bar, but there's a couple problems. One problem is, like I just said, the amount of selling pressure. The bears now have 2 bars and about 10 bars. And these bars over here, bar 2 was decent, but these ones, we have a doji on bar 3, and bars 1 and 4 closed above their midpoint. So the selling pressure so far is weak. And then you got bar 9, but the bears didn't get any follow through. And it was really just overlapping bar 8, and bulls bought it immediately. Some bears will sell below 13. They know it's a low probability trade because another problem with it is what I've been mentioning on the higher time frames. We're low in a trading range, so this might be a low 3, but the location is bad, and it's strong enough from bar 4 to bar 13. This all could be 1 leg, and any pullback will likely lead to higher prices. And then the sell did not trigger below 13. Everyone bought the close of bar 13, and now we have a bull breakout, 14. 14 traded above 13, but then closed below. So it could be stronger for the bulls. A lot of overlap here, but I think more likely it is still 3 pushes up, and you can argue it's 3 pushes here, but the selling pressure is weak. So we might get a bull breakout of a wedge top and a measured move up. Inside bar 15. The market's in breakout mode. The range is getting smaller and squeezed. The bars are overlapping. It's a tight trading range. Probably buyers below and sellers above, but I think we're always in long. And it's possible this is early in the small pullback trend, and if not, it's probably a trading range. So worst case for the bulls, they buy with a wide stop, they scale in lower, they'll probably make money. And the bears are hoping they get a breakout, but even if they do, there's open gaps. So the targets here, we have a gap. Here we have a gap, support down here. So I think the downside is limited. Bull breakout 16. So what's wrong with this wedge? Why are we not triggering sells below bars? Instead, we're not going below bars, and we keep getting breakouts to the upside. At some point, the bears might give up, and that's what could lead to a measured move up. It's a spike in channel, but this is all still so tight that it could be one leg on a higher time frame. And if it's all one leg, it's leg one, and the context is good for a leg one and a reset of the market cycle. So if this is leg one, the odds are we'll get a pullback, if a pullback, and then higher prices in legs 2, maybe 3. Is 16 a strong sell signal bar, even if this is a wedge top? And remember, there's not enough selling pressure here. But of course not. 16 is a bad sell signal bar. There's probably buyers below. And then 17, it's the same thing. Do you want to sell below 17 consecutive bull bars in a tight bull channel? The only option is to be long or flat here. Probably buyers below. 18, we traded below bar 17, triggering the sell, but it was a weak sell. And it's probably a low one short. You can argue it's a big low 2. We triggered below bar 8, and then this was all a micro channel, and we finally got a pullback below 17. So on a higher time frame, leg 1, leg 2. But again, the problem, where's the selling pressure? The bears are not getting the selling pressure they need. And then bar 17, the sell signal bar, consecutive bull bars. 18 is the entry bar. That's just not good enough for the bears. The bulls got a bar completely above the 5-minute EMA, bar 17. Also remember, by bar 18, there's an 80% chance we've seen the high or the low of the day. And of course, at this point, more likely we've seen the low of the day. 19, bull breakout, but still inside bar 17, so still minor, but this looks more like a tight channel and a small pullback bull trend than a wedge that you should be looking to sell. You can argue we have a bull channel, and the probability of getting a bull breakout of a bull channel is 25%. That's fairly general statement, because in such a tight channel like this, the odds are greater that we get the upside breakout. And its channel is more like this. Look how broad this channel is. One big push down, huge pullback. Another big push down. These are climactic with deep pullbacks. Here's a third leg down, breaking out of the channel line. And what's the stat on that? 25% chance we accelerate down into a stronger bear trend. 75% chance we reverse within 5 bars and test the trend line. What's the trend line? Traders will draw it different ways. This could be the trend line. You can see we reversed within 5 bars and tested it fairly quickly. But if it is a broad bear channel, the trend line could be all the way up here. 19, probably buyers below. It's a bull bar and there's no good reason to sell. Might be a small pullback bull trend. Bull breakout 20. Aggressive bears might sell, betting on what I just said. Bull breakout of a channel and 25% chance, but this is so tight that this could seriously be all one leg on a higher time frame and a small pullback bull trend. And it takes, remember that markets have inertia. It takes more selling pressure than we're getting to reverse this. And because of these consecutive sell climaxes, the overall context, we're certainly always in long, and I would not be looking to sell here, probably going higher. 21, we immediately pulled back. Bulls who were long took profits. Aggressive bears can sell. 19, there was a gap, so breakout above 19. We have a gap, immediately tested it, but look what happened on the test. Bull breakout pullback. It looks like traders are buying. 21's a weak bear bar, big tail below, and best case for the bears, a trading range, but it could be a bull flag and a bull trend. Inside bar 22. Again, usually sellers above, buyers below, but in this context, I'd rather look to buy below. As far as selling above, I think there's an increased risk that we get the upside breakout and go higher. If this is a small pullback trend, it could go on for many bars. And if this is an overall trading range, there's lots of resistance above we could test. What kind of resistance? Really any breakout point. When you're in a trading range, breakout points get tested and gaps get closed. So huge bear breakout here, deep pullback, but never tested the breakout point. So that's going to be a magnet. You had bulls buying this rally, got trapped here. This will also be a magnet. I'm not going to draw every support or resistance level, but just to demonstrate what I'm talking about. Here's another one. Buy climax. Bulls get trapped. Maybe they have a chance to exit quickly on this bar, but they had a really small window. Here's another resistance area. There's resistance all the way up, and you have to see how the market reacts at each level. But so far, this is a pretty strong bull trend. I'll actually keep that one. I think this is a really significant one, and I'm curious to see if we get there, what the market does. I did not watch today, and I looked briefly at the chart, obviously in the beginning, but I did not really study the chart today and see what happened. Bull breakout 23, so that's the problem with selling above in this context. Do you really want to sell? I mean, that's one of the number one rules in the Brooks trading course. Tight bull channel, only look to buy. So your options are to be long or to be flat. So bull breakout, and it closed above all the bars to the left. That's good. But the context, we're still within this huge trading range, and any resistance could be the one that starts a reversal. But if we are in an overall trading range, look how broad it is. We could come all the way up here. We could test yesterday's high. And this is strong enough. Any pullback, even if it's a big, deep pullback, probably lead to buyers below. So if this is all one leg, we could come even down here, 50%, probably find buyers. Breakout and follow through, bar 24, might be by the close. It's a small pullback trend. Some traders might argue leg 1, leg 2, leg 3. But leg 3s and small pullback trends, you can buy, and you'll probably make money. It's a bull breakout and follow through with strong bars. We have an open gap with the 21 high, trapped bears. We're completely above the moving average and certainly always in long, so definitely okay to be long. And the market could go for a measured move of this breakout. And then you can see 25 continuing higher, got more than halfway there on the next bar, probably going here before down here. So bulls by the close, stop below. Maybe the stop's here. Maybe it's below the swing point, 21. But with the far stop means big risk, but big risk, you have high probability. And obviously the market's going up, so you want to be long. Micro channel since 21, so 5-bar micro channel. The odds are there are buyers below. The first pullback will lead to buyers. And then that's what happened on bar 26. 26 was a terrible low 1. Some traders might argue big low 3, like I mentioned earlier, this being a low 2. Low 1 below bar 8, low 2 below 17, and then a low 3 here. But these are terrible trades. It's a tight bull channel. Your signal bars are bull bars, and the bears have not had consecutive bars since the open, and those consecutive bars were pretty weak. Big tails below, dojis, and overlap, and inside bars. 26 is a high 1 signal, and because it's a small pullback trend, traders can buy for any reason. And where did 26 test? You can always look to the left and see. Obviously, it's a mess in there, but you had bears selling above bars, maybe 21. Maybe they sold 24, betting the bulls would not get follow through. Maybe they sold above 23, betting they wouldn't get follow through, but we didn't get there. And so you have bears who sold, they're trapped. You have bulls who did not buy, they're trapped out. Everyone's eager to buy back shorts or buy to initiate longs and get into this bull trend. But because you can argue it's 1, 2, 3 legs up, the market may correct here and get maybe 10 bars and 2 legs sideways to down. We're accelerating, possibly late in a trend. It might be 20 bars into a trend and we're getting a parabolic move. So there is an increased chance we correct here, but I would not be looking to sell. I might sell to get out of longs, but not to initiate new shorts. 27, the high one triggered. In general, high ones, when they're happening in the context like this, small pullback bull trend, and after a strong breakout, okay to buy. But the only problem I have with this one is all the trading range price action to the left. But even with that said, I would not sell above 26. This rally is just too tight. And then 27 was a decent entry bar. Broke out to the upside, pulled back, closed below the high. But who's going to sell below 27? Really nobody. And then you can see we traded below 27 and found buyers. 27 is a second reversal, so reversal below 25 and then pulled back, maybe a double top with bar 25 and 27. And then 28, another breakout below 27, but immediately bought. So not the strongest buy signal bar, 28. It's a bear bar. It's a buy reversal bar, but a bear body, far above the moving average. Might start to go more sideways here, and bulls will exit below a bear bar closing below its midpoint, or they'll exit a scalper's profit distance below any bar. And then surprise bar, 29, breakout to the upside. This is a bar that bulls might take as a gift. It's still always in long, and we're still probably going higher. But it's becoming parabolic, like I said. Look at the channel line. It was here, then it's here, then it's here. And even if it's not breaking out here, you can say this is the channel here, here, and here. So we're testing it. And you're expecting this line to be resistance. It might be minor resistance and a place where bulls take profits. So I would not sell here. And again, obviously because it's a tight bull channel. But we could pull back here. And like I said, it could be 1, 2, 3 legs up. And it could be then 1, 2, 3 nested wedge, breakout of a double top. The bulls still need follow through here. And then look what happened on bar 30. So I'll redraw that channel line. Small pullback trend. We're getting late in the trend. It's been more than 20 bars. And it's been 1, 2, 3 legs up. And then 1, 2, 3 nested wedge. It's a parabolic wedge. And that means the reversal should be minor. So there's probably buyers below. But it can be wise to take profits in an area like that. And after you get this hesitation and overlap, a couple dojis and sideways bars, and then a strong bar, that could be a gift. And then obviously traders took it. Outside bar 30. Looks like we broke out a similar distance above and below. I'll take a look at that. So let me just snap mode. So that broke out 1.25 points above and 1.25 points below. So it broke out an equal distance above and below. It's a bearish outside bar, but in a strong bull trend, probably better to look to buy below the bar. It's an expanding triangle, possible expanding triangle bull flag. But I did just mention we could get a correction sideways to down here, and it could last maybe 10 bars. Inside bar 31. And so when you have an inside bar after an outside bar, it becomes an IOI pattern, and that's breakout mode. But it's also a trading range. The market is going sideways, and we could continue to go sideways. And after such a big bar like 30, you probably have sellers above. Traders who bought the close of 29 got trapped immediately. They're disappointed, so probably bulls looking to exit above, and they might not look to buy until after a correction that's maybe 10 bars and 2 legs and closer to the moving average. Inside bar 32. It's a triangle on a smaller time frame. And the bull's hoping that it's a bull flag. The bear's hoping it's a reversal. Bulls will exit below a bar like 32 and look to buy lower if they're not already out. 33 going higher. So the problem here for the bulls is, like I just mentioned, you had bulls who bought the close of 29. They got trapped on 30, disappointed. Now we have one, pause, 2 legs up. Maybe we go a little higher. But if we do, it could be 2 or 3 legs up. And then high in a trading range where bulls just got trapped. But it's still a minor reversal. If you look at this, where's the trend line break for the bears? So there's really no reason to be selling yet. The bears do not have a trend line break with big bear bars, consecutive bear bars, good momentum, a big distance. We're still on the trend line. And so bulls are buying that. But I am concerned with this red line. Bulls trapped here, possible double top, and then bigger correction. Broke out to the upside on 34. It's a higher high, but there's a huge tail on top of the bar. It's a sell reversal bar. Weak signal bar, micro channel since 30, no low, traded below the prior low since here. But it is parabolic, and then it's 1, pull back 2. The market's starting to go more sideways. So you might, and what that means, you could say the market cycle restarted here, strong bull breakout, pullback, and then channel phase. We could easily come back and test the low of 26. Channels evolve into trading ranges. So we might come back and test here before the buyers come back in, but still always in long. 35 a bear bar, but a doji, weak entry bar with a weak signal bar, but now 35 is a high one buy, high in a trading range, late in a bull trend. It's aggressive and it's definitely a scalp. Traders will sell above 35 for a scalp, and bulls will take profits above 35. In the channel phase, bulls are buying below bars and taking profits above bars, and you can see that happening. 36, continuing lower, so now a 3-bar micro channel. The highs are trending, but the bars are weak. You have a bull body, 34. You have a doji, 36. Doji, 35. No big bear bars, but the market is going more sideways. So the bulls, like I said, will probably look to buy lower. And that might be the start of the channel. That might be the moving average. Might be after 2 legs sideways to down. Big bull bar, 37. We traded below 36 and then reversed up. 37 is a high one, but in trading range. And the bar is big, so big risk and low probability. Bad trade. Probably sellers above. And then we triggered the sell above 37, but 38 is a terrible, not a terrible, but it's a bad entry bar. But as far as buying, traders probably won't buy above 38. It's probably more sellers above. It's a tight trading range. This is the upper part of the trading range. You might have to test lower. But it's still a tight bull channel. Bull breakout 39, but still within the range. So it might be a trap. It also could be 3 legs up. 1, 2, 3. And at this point, it's a truncated wedge, which means a truncated wedge is just a wedge where the third push does not go beyond the second push. And so that's why it's drawn like this for now. And then look what happened on 40. So 39, it's a good-looking bull bar, but look where you are. It's not breaking out of much. It's breaking out of a tight trading range. And it's really, I think I would refer to this as barbed wire. The market's in agreement here. This is a fair price. It's not going far. Breakouts are failing. Look at this price level. We try to break out to the upside. We pull back. We try up and down. We're right back here. Down, right back. Down, we're back. And we're just staying here. And so here, remember, like this here is a bull trend bar on another time frame. And then it was a bear reversal. It's just happening on this chart. It's a bull bar here. But if you look at a higher time frame, this would just be a tail and then a reversal bar. And so 39, the problem with it, as strong a bar as it is, the context is bad. And like I said, possible truncated wedge late in a trend, and bulls looking to buy lower. Bulls are taking profits in this area. And bears know that, so they'll sell for a scalp. So you have bulls and bears selling the close of 39. 39 is a breakout, but breakout of what? Again, bad context for a breakout. The bulls need to do more, and they need at least one more bar. And even if they get one more bar, they still need one more bar for follow through. And so everyone sold 40. But now 40, a big bear bar, everything's completely above the moving average. It's a bull channel and a strong bull trend, probably buyers below. But 40 is strong enough, it'll probably get a second leg down. And then you can see bears who sold 39, they got big bar, 40, they took profits. And then we went sideways. Inside bar, 41, probably buyers below and sellers above. Another inside bar, 42, breakout mode. The market's contracting, and it's a triangle. The trend was obviously a bull trend leading to this triangle, so probability favors an upside breakout, and it's also still room to the upside, still magnets above in the trading range. The bears have not done enough for a major reversal here. They can get a surprise, but it's low probability. The bears haven't had a bar even touch the moving average in about 20 bars. So there's also a gap bar set up. Traders will just buy the moving average test. And here's the trend line once again. So there is a trend line break, but it's sideways. And the selling pressure is weak. The bears still don't have consecutive bars. So for major trend reversals, you want to see trend line breaks with momentum, and you want them to be down, not sideways. So I think more likely trend resumption. We have been sideways here for about 20 bars, so it's becoming more neutral. And then 43, traders who bought the moving average here, they got trapped on 43, and it pulled back on the same bar, but that was really disappointing. So bulls probably not hanging on to that trade. And 43, it's a high one, high in a trading range. Big bar, big risk, bad trader's equation, probably sellers above, and sellers on the close. Also look where 43 tested. The low of 26, the low of the start of the channel came close to it, and then traders came in. Bulls bought. And then we went above 43, found sellers, and reversed to the downside. But the context is not great to be selling. There might be more room to the downside, but I think this is more likely a trading range, and there's support below, and the downside is limited. 45, testing this price once again. It's a lower low, below 43, and a micro double bottom. It's good for the bulls that this triggered, so now we have high 1 and then deeper pullback, high 2 above 45, but no bull bar in, well, I'll say this, one bull bar in 6 bars, so the buying pressure is fading, but it's still a trading range and more likely a flag in a strong bull trend. Overall, a trading range with magnets above, probably going at least a little higher. And we got a trend line break finally, a little more to the downside, and more likely, trends usually don't just convert into opposite trends. So we have a strong bull trend. Less likely we just continue down. More likely we get a test of the bull trend's extreme before an attempt at a major trend reversal. So we can get a vacuum test here. 46, we finally tested the red line, which is the start of the channel, and we have a completed trading range. So the market cycle, bull breakout, pullback, channel phase, trading range, and now a breakout above 46 could be a reset. But now you're in a trading range. So breakouts, lower probability. 80% of breakouts in trading ranges fail. So there's room to the upside. Bulls will buy for scalps, maybe to the middle, maybe to the top, but the upside might be limited. 47, a bull bar. They're not very strong, but you think about the opposite side for the bears. What do the bears have? Well, there's been 2 or 3 legs down. 1, 2, 3. We're testing support at the start of the channel. We're in a trading range. We had a decent, I say decent, it was a bull reversal bar closing on its high, but the body was small. But then 47, it's a terrible low one, short, probably buyers below. 48, bear trend bar closing on its low. Probably a last-ditch attempt for the bears. They're hoping we get a breakout to the downside, but it's been maybe 3 or 4 legs down, and the bears need one more bar. It's a similar bar, really, to bar 39, just the other way. So we're in a trading range here. 39 is a bull breakout, but not above the high. And then over here, 48 is a good bear bar, like 39 was a good bull bar. Good bear bar, but they still need to do more. We're still above the low of 46. So there might be more buyers on the close of 48, the way there were more sellers on the close of 39. The bears need to do more. And whenever the bears need one more bar, they usually don't get it. And in this context, you can see we're testing the support and finding buyers, and testing it again, buyers, testing it again, and then buyers. So if a bear sold 48, their entry bar is really disappointing. Now the bulls have a more clear wedge bottom, good context, bull trend, and then trading range, possible bull flag. It might be the final flag. We've been sideways for maybe more than 20 bars now, and we finally got that trend line break by the bears. So there's probably resistance above at the high of the trend. Maybe we retest the high. Maybe we retest high closes like the 39 close. But here, I would not sell above 49. It's actually probably a credible stop order trade. Inside bar, the bears did the minimum. They didn't let the trade trigger. But now, think about bar 50. It's an inside bar after nested wedges. I'll draw more. You can draw it several different ways. And this is the problem the bears are having. And then you add the fact that 50 is an inside bar, so lowers the probability for breakouts. You have buyers below 50 for many reasons. And you probably have buyers above 50 because the context is good. And then 51 bull breakout, a little bit of a surprise, crossing the moving average. Strong enough bar, probably going at least a little higher. And this might be a buy the close bar. If a bear sold above 50, they're clearly trapped and disappointed, and they'll just bail out of the trade. An obvious stop location for the bears is up here. And then look what happened. Continued buying by the bulls, but really climactic, 52. And then you have to remember the overall context. So we tested that. I'll delete that line, but I want to draw this one over here. We're breaking out of a swing high over here, a lower high. So here's a high, lower high. And then we're trading above it, but we could not close above it. And if this is an overall trading range, maybe this is leg 1, pullback, leg 2, and it's a second leg trap, because the second leg traps often behave this way. Leg 1 is strong, and then leg 2 kind of looks stronger, might have more momentum, but it traps traders into buying high. And so you have to wonder, is 51, 52 a measuring gap or an exhaustion gap? And my concern is the context. You look to the left, and what happened the last time we were at this resistance level. We sold off all the way down here. So strong rally, but within a trading range. And then trendline break. The bears are hoping we get a higher high major trend reversal. And of course, 40% chance of that happening, but more likely we go into a trading range. This was enough sideways price action. There's probably sellers above here, and they'll probably make money. So whether this is an exhaustion gap or a measuring gap, I think more likely, at this point, you don't know. But because of what's happening here, the bull's not breaking out of this resistance, it might be more likely an exhaustion gap. And if it is, we'll test the bottom of the leg, we'll test this breakout point, this breakout point. And by the way, here, so bull breakout 51, and then bull breakout 52. You can say it's a bull breakout and follow through, but really, for me, I see 52 as the breakout bar, breaking out of these bars to the left. 51 is just a trend bar within the trading range, and it's really just breaking out of a couple bars here. 52 is really breaking out, so 52 for me, I see it as the breakout bar, and look how much of it's overlapping. More than 50% looks like it's inside the trading range. So this would be 70%, probably about 60% of this breakout has overlap with all these bars to the left. And then you look over here, It's overlapping all these bars to the left and could not close above. So the bulls still need follow through. And then 53, bad follow through. High one, but possible, 2 legs up, and climactic second leg trap might be more sellers above 53. 54, another bear bar, so for the bulls, this is getting disappointing. And 54 is a high one trade, high one setup, probably sellers above. 55, another bear bar against the bulls, still a high one, but a bad high one, sellers above. And then where are we testing? We have this breakout point here. They got tested close on 54, almost closed on 55. There's still a body gap. Here's the highest close, bull breakout. The bears tested it. So if the bear sold here, scaled in higher, they made money. But the bears want to close it further. But I think here, so if you think about the context, we were sideways here. We're sideways all in here, overall in the chart. And then you have a climactic breakout with bad follow through. Should get a second leg, but you have that increased risk that we're high in a trading range and it doesn't get one. And I think more likely we're starting to go more sideways. And then 56, that's the second leg I'm talking about. You had bulls by the close of 52. Enough momentum up, strong enough it should get a second leg, but a dangerous place to be buying. But if you did buy and scale in lower, you got a test of your entry price, the close, or this resistance level. You can see it might have exceeded that level by 1 tick and then reversed down. And that's the high one I'm talking about, bad high one. And then you have traders selling above. 56, a bear, reversal bar, 4 consecutive bear bars, and really disappointing follow through for this bull breakout. Probably going more sideways. 57, another bear bar. At some point, the bulls might just give up. They have so many. The bars aren't incredibly big, but there's just consecutive bear bars. And there was a pullback, so that damages the bear case. But if this was a measuring gap, it would not be doing this. So I think more likely it's an exhaustion gap. And if it's an exhaustion gap in a trading range, breakout points will get tested. If a bear bets this is a trading range, they sell above 50, they scale in higher, they might get a retest of this line here. I'll delete this one. And then 58's the give up bar I'm talking about. We traded above 57 and then went outside down. There might be a little more to the downside, but I think we're getting closer to the bottom. We could easily vacuum down to here. An obvious stop placement for the bulls and big bull breakout, but bad context. Traders will buy a deep pullback, maybe 50%, maybe even 100% down here. But you have this breakout point, will probably get closed. And then it got tested on 59. So we've had how many bars? Maybe 7 bars without a bull close. Where's the buying pressure? It looks like we're in a trading range, and we might be in an expanding triangle. And if we are, we could come back all the way down here. 60, another bear bar, and another trigger for the bulls. So this would have been a high 1, high 2, high 3, and it failed. And so we might go a little lower for a few more bars and a couple legs. But the downside is probably limited. You have support below. We're testing support here, this breakout point. The low of the buy climax 51, the expanding triangle low. The chart's getting a little crowded. Since we tested this one, I'll go ahead and erase that one. And then 61, testing a little lower. We're testing the breakout point 51. I'll keep this for now. Tight enough bear channel that it's hard to buy above 60 or 61. But it would be a high 4. So again, high 1 triggered above 55, then above 57, then above 59, and now high 4, 61. Low in a trading range. This was a minor second leg. Maybe this gets a second leg 1, deep pullback, and then delayed second leg 2. And look what's happening on 62. Bull breakout, crossing the moving average, and it looks like we're in a trading range. The problem with staying long here is this was strong enough for a second leg, and it is all one leg on a higher time frame, even though in this time frame it's like 4 legs down, leg 1, pull back, leg 2, maybe leg 2, pull back, leg 3, pull back, leg 4, so maybe 3 or 4 legs down, testing support, and so that's why we bounced. And it looks like a perfect test of the low 51, and that's always interesting. And then if we look at the other side, the bear breakout, maybe from here, we're at about 50% where we're finding resistance. There might be more to the upside, but in general, here, looks like we're in the middle of a trading range, so not an ideal place to initiate trades. Traders like to buy low and sell high. 63 going a little higher. There's a tick gap, but in this case, the bull breakout's overlapping many bear bars. The bars have tails above. The 63 follow-through bar is smaller and did not close above. So it's a tick gap, and that's great, but not enough. Now this might be strong enough for a second leg. Buyers below 63, but they may not come in until lower because this is the middle of a trading range. 64 continuing higher, but the bodies and bars are getting smaller. This is a wedge on a lower time frame. 3 pushes up, so we might correct. Inside bar 65, still a wedge. It's a high one with bad context, high in a trading range, and a wedge on a smaller time frame. Might be more sellers above 65, but we could easily also vacuum up to test resistance, and instead we found sellers. 3 consecutive highs, that might be a ledge. I'm actually fuzzy on ledges. I don't know if it's 2, 3, 4 consecutive bars with the same price for the high or low. But with ledges, whenever there's a breakout, the odds are we'll come back and test the price of the ledge. 66, the first bear bar in 5 bars, and strong enough leg up for the bulls, it'll probably get a second leg. So buyers below 65, but it could be a minor second leg. The market's in a trading range. Traders can also view this triangle the other way as a contracting triangle, so more like this. And from the high, like this. So there's always different ways to look at it. It is an expanding triangle and a contracting triangle at the same time right now. But right now, because this leg is the biggest leg, this one's inside that leg, this one's inside that leg, the market is contracting. Remember, this was strong enough for a second leg down, so there's a risk that 66 is the start of that second leg. The bulls had maybe 3 legs up on a smaller time frame here. We're testing resistance. And then outside up, so the bulls, buyers below, they're getting their second leg, but the upside could be limited. Bulls also see that as a breakout of the contracting triangle, but the bulls need to do more. It's a problem that 67 didn't close on its high, and it still needs follow through. And even if it gets follow through, you need to get above this resistance level, the red line, the current high of the day. And then back here, obviously there's more resistance to the left. Bad follow through for the bulls. 68. Low 2 short, low 1 here, and then deeper pullback, low 2. Reasonable stop order trade, but need a wide stop. But 2 legs up, high in a trading range, and a good sell signal bar. And then outside up, 69, bears were trapped. But 69, it's a third push up, and it's nested, and so this is pretty interesting. Leg 1, leg 2, leg 3. And then here, leg 1, leg 2, leg 3. And it's breaking out of the channel line of this one. So nested wedge, and 69, it is just barely breaking out of the high of the day. But again, it's high in a trading range. You still have resistance here. Maybe I'll do this. So still resistance above. Sorry about that. And then you can see the follow through. We traded above 69, but found resistance and disappointed the bulls. The bulls are exhausted, and the bulls are taking profits, and the bears are selling high. Everyone's selling high. And this is just getting messy, so I'll clean it up a little. So bear bar, 70, but trading range bar, closing in the middle. Probably sellers maybe at the open of the bar, maybe at the high of the prior bar, somewhere. It's not ideal to sell here in the middle of a bull bar. It'll probably get a second leg, but a minor second leg. And the increased risk that it doesn't get a second leg because it's a third leg and a nested third leg. But instead we did get the second leg. It's hard to see on this chart, but that's the tail on bar 71. So leg 1, you could argue. I mean, it's really leg 3, and then pause. And then traders who maybe made a mistake buying the close of 69, they had a chance to even scale in and make money. 71 tested the high close. But in general, the way I see this, I think it's better to set a limit order after you see this bar. After you see this bar, you're expecting sellers. You get that, and then you can set a limit order to sell the close of 69 and then make a scalp. And in this case, we might be high in a trading range. We can come all the way down here. 72, bull reversal bar. So bears scalped out of the trade, and we're finding support. Obviously a tight trading range here. Traders are buying below bars and selling above. Bear bar, 73. So 2 legs down for the bears. 1, pull back 2. We're at the moving average. Might be more buyers here. Buyers at the low of 69. Follow through for the bears, 74. So minimum follow through, but there's no gap, or at least no micro gap. There's a body gap, but the low of 72 overlaps the high of 74. And 72 is a bull bar, so this could be a lot stronger for the bears. It's 2 legs down in a bull channel on a flat moving average, probably going more sideways into the close. There's about 10 bars left in the day, really even less. So if you did not make money in the first 70 bars of the day, probably not worth trying to make money in the last 10 bars. 75 bull breakout, testing resistance. Bulls maybe about the close of 72, front running the breakout, but it's high in a range. It's a bad trade. But if they did, they were disappointed, and then we got a retest here, but did not quite reach the close. Bulls might be trapped there. But there's so much overlap. You know that a bull can probably buy almost anywhere, scale in lower and make money. 75 is a bad low 1, big bar, and in the middle of the trading range. Buyers below. 76 a good entry bar, but it's small and testing support. So the bears still need at least one more bar. Even if they get it, you know there's support lower to the left. But then instead we got an outside bar. 77, bull trend bar, trapping bears, selling low, 1, 2, 3 legs down, and then a reversal up, but right into the middle of the range. And so look at the midpoint. Do you really want to be initiating a trade there? Of course not. Bulls are buying low and taking profits right here. And so that increases the risk. We get bad follow through, 78. And then there was a tail on 78, but instead we got follow through. And it's a bull breakout, but it's still within the range. So there might be more sellers on the close of 78 or above 78. And you can see this has 2 legs up. 1, pullback, 2. Testing where bulls got trapped were high in the trading range. And then that's exactly what happened. Traders sold the close of 78. 79, a strong bear trend bar, but it's an inside bar. It's in the middle of a tight trading range, forcing you to sell. If you sell on a stop below 79, forcing you to sell in a terrible place and just above the moving average, which is flat and probably going more sideways. Bar 80, a small entry bar for the bears. But remember, the prior bar was an inside bar, so there's an increased chance the breakout fails and we retest it. The fact that we're in a tight trading range reduces the probability even further. And then 81, just a little more sideways to down into the close. I mentioned this earlier. I thought we were always in long because of context, probably by, I'm not sure exactly what point, but I definitely thought I thought it was unwise to be looking to sell down here, and for that reason, it's kind of like my instinct telling me we're always in long. But then you get consecutive bull bars, I don't know, maybe by 7 or bar 8, always in long, and then all through here, always in long. So bulls might exit below bear bars, closing below their midpoint, but if they did here, did not trigger bar 9, and then did not trigger 30, did not trigger 40, and there's no reason to go short for a swing here. But then eventually here, you get the trend line break, and there's buyers below. So I think still always in long, but converting into a trading range. And when it's converting into a trading range, you have to shift your mindset to buy low, sell high, and scalp. So even though it's always in long in a strong bull trend, the overall context, like the daily chart, we're in a sideways market. So when you get a buy climax like this, it's easy to get trapped into thinking it's always in long again, but you have to shift your mindset into thinking buy low, sell high, and then when you get climaxes like this, you might be high in the range, and it might be a second leg trap. So buy low, sell high. We're obviously high, and you have to shift your perspective. So always in short from context here, probably. But again, I don't think of it in terms of always in a trading range. I think of it as buy low, sell high. And that was the mindset for the rest of the day. It was never clearly always in long or always in short, unless you're thinking like 3 legs up high in a range. So the close of 69 is probably always in short, which can be confusing. And that's why I just think of it as buy low, sell high. Here, 3 legs down might be always in long on the close of 76, even though it's a strong bear trend bar in the middle of a trading range. And then for stop order trades today, I thought you could buy above bar 4, bar 5. I thought you could buy above any of these bars. The context was good for a swing. High one above bar 10. Inside bar, so it might be a lower probability trade, but still okay. And then it's always in long, so you can buy above any bull bar. And that's the case all the way through here. Now, when we got here, I thought it was becoming climactic. And I thought 29 was maybe a profit-taking bar. So as far as buying above 31, I'd be less inclined to do that, expecting a deeper correction. And then we went more sideways. Obviously not great to buy a high one, high in the range. The odds were we would get a deeper correction, and then obviously not buying above 43, but then I thought 46 was a reasonable stop order trade, and then buying above 50 was a reasonable stop order trade. And then up here, I don't know, once the bulls got 2 bars against them, they can exit below 54, maybe on the retest up here. But as far as a stop order sell here, not really ideal. 61, you can argue 3 legs down in a breakout test or test of support. And so 61 wasn't the most unreasonable trade. It's hard to look at this. It's a tight bear channel. But remember the trend line breaks or the spike breaks, the pullbacks. We went above 55, 57, 59. And then if you went above the high 4, 61, that'd be the 4th reversal attempt. It's a buy reversal bar, and it's at support. So reasonable stop order trade there. Even though it's a tight bear channel, all these trend line breaks in the context, you're in a big up, big down environment, so you're buying low. Up here, maybe you can sell below 71. You're fairly high in the range, but it's for a scalp. And that'd probably be it for stop orders today. For limit orders, small pullback trend, buyers below any bar, buyers below bar 8, buyers below any of these bars, but they didn't trigger until bar 17. Bad low 1. Any bad stop order trade is a good limit order trade. Buyers below here, buyers below 20, buyers below 25. I'd be less inclined to buy after the buy climax 29. Obviously you could and make money, but in here it became more sideways. Sellers above bars and buyers below. I think here, sellers above 30, but more bulls taking profits. It's an aggressive sell for bears, but it's reasonable. You're expecting a correction, and then it's 2 legs up. And then all through here, it's a really tight trading range. Sellers above bars, buyers below. Buyers below here, 3 legs down. And I mentioned this tight trading range. There were probably sellers above bar 38, sellers on the close of 39. And then here, probably buyers at the moving average, but disappointing here. They'll get out and look to buy lower. So 43, below that bar of support, and you can see buyers came in there, buyers came in here. It's a stairs pattern. The breakouts are getting weaker and smaller. So breakout here, bulls made money. Breakout here, immediately reversed, bulls made money. Up here, buy climax and possible second leg, high in a trading range. So 55, high 1, 3 consecutive bear bars, probably sellers above. And then through here, still sellers above. Here's a more risky one, but there's really nothing to buy. And then I thought here, not ideal to sell here, low in the range, high 4. Strong enough bull breakout, buyers below, they came in here. Second leg, risky to buy below here. I would not advise it, but it did work. And then, of course, here, 69, sellers above this swing point, 3 legs up, nested 3 legs, and sellers above 69, sellers on the close of 69. And then that applies to this bar here. In real time, you see a third leg, nested 3 legs, bad follow through. Traders set limit orders at 69 close. They get filled on 71 for a scalp. 72, high 1, high on a trading range. So sellers above, but instead they sold the close. That's also for a scalp here in the middle of the range here, so then you expect a bounce. Buyers below 75, and then they came in. Maybe they came in over here, testing this breakout point, but we did not quite get there. We're getting high in the range, so it might be more sellers above 78, scaling in higher. We did not trade above, they sold the close. That was about it. As always, please feel free to leave questions in the comments and include timestamps for any specific questions for this video. And with that, I hope everyone has a good rest of their night. Thanks for watching.